How's it going, guys? This is Forensic Forex with Deontay, and I'm back into the video. This is your daily update on US dollar versus the Swiss franc. So today, we didn't get that large impulse to the upside or that large range we were expecting to go up to Tuesday's previous daily high. It's still technically Wednesday, even though I know you see the Thursday candle has opened a couple minutes ago. What time is it now? It is 5:15, so it opened up a couple minutes ago, like 15 minutes ago. We did catch a New York long opportunity. We went over that with that in the chat, how we rated the Asian session low or New York session was going to give a probable buy setup above the weekly opening price. I do suspect, like as I said, I do suspect price may run back down inside this PDA right here. If this swing low is going to hold stance, it wouldn't want to run this low. That's why I have the shield here, right? It should want to protect this low. But I do think odds are we do peek into this. Maybe we peek into this and then we go higher. Or if we peek into this, this whole thing changes, right? It changes over to what? Either false break or then bearish trend, because we're breaking a swing low, which could be bearish momentum, and we want to follow that momentum with a lower swing high. Make sure you're following there. If you don't understand, go back and listen to what I'm saying. If it's not clear, message me. You have direct access to me. So we have another down close. So we see that Wednesday candle close. This could be another buying opportunity. Again, the market is still in range. It's inside the range of Friday's high and Friday's low. Now, I know there might be a discrepancy depending on the broker. I'm using Oanda as the broker or the liquidity provider that you see here. We could still shoot back up here and take out that high. Let's take a look at the intraday. So telling members, right, price will likely run the Asian low and give us a buy opportunity. Those were the characteristics I was showing the chat. We can also see New York session. Let's take a look at that. Let's go back here. Zoom in. And we know there's another session here, the dead zone, in between London and New York. This period we don't trade. You can see we have sell side here. This is sell side liquidity pool. It was ran out here. See that swing low? 1, 2, 3. Let's take off this off the chart. That swing low is rated. We went long below 12 a.m. and below 7 a.m. Right, the very first fair value gap. This is an old entry technique, something I haven't talked about in a while. You'll see the very first fair value gap that forms after rating sell side or buy side. Play it forward. It should be this one here. Label the wrong one. This is it. That very first fair value gap is tapped. That could be a long opportunity after rating the sell side. Now, this phenomenon too repeats itself as well. I'm not saying every single one, the very first one that forms after rating a liquidity pool will provide a good launch or substance for those longs or shorts. So we went long here. And notice where I'm going long though. I'm going long where? Below midnight opening price and below 7 a.m. Do you see where that fair value gap is forming? That's 12 a.m. That's the start of the Wednesday true day open. This is the start of the kill zone, New York session. Where's the entry? Physically below both those price points after rating sell side. I'm giving you the framework to frame up your objective, not subjective. That's very different. Objective levels. We know that's the 15-minute swing low. It's not a random box that someone drew here and said, oh, this is support. That's not what we're doing here. We're objectively labeling where our buy side and sell side is. And we play it forward, and we're reverting right back up into what? Buy side liquidity pool. Let's go on the 15-minute chart. You'll see that's that 15-minute swing high. Right there. 1, 2, 3. That became the target because it naturally took sell side first while also being above the weekly opening price. That's the weekly opening price. That's the start of the week here. This black line here is the start of the week. We're above it. So we're a premium for the week. But for the kill zone in this short-term period, we were in discount and oversold condition for the day and the kill zone. So we took that long and we're able to see price target that buy-side liquidity pool there. After that, shortly, price did break down. Anywhere here, you would want to take partials. Why? It's really crucial to pay the trader. And this market continued to sell off here. And you'll see later on and speed it up for the video's sake. and price came down, and then it shot back up. And it just, as soon as it hit our stop loss right there, it turned around. So you can see, we don't win them all. I'm not sitting here going to show you setups that I'm always going to win. That's not realistic. We all know traders take losses. There's no need to sit here and say, oh, Deontay has a 99% win rate. I don't. My win rate is anywhere from 60 to 70%. And sometimes it might climb to like 80, but it's never like prime. It's not perfect. It's okay because we manage that risk. And that was our only setup for the day there, for intraday. So we were able to take something off, but we did give some back. Not bad. Let's go back to the daily chart. Let's look at the DXY just briefly. See the DXY pull back down into that fair value gap. We were speculating that price was going to pull back down into that fair value gap and possibly make the higher swing low inside that region here. So it makes it here. If we can get this down close candle for price to come back Thursday and push all the way back up to this candle's high, we could have a potential smash candle long. That's loading right now. We are in a discount. We're below the monthly opening price. This low to this high. Again, we have a range. Measure that range. Are we below equilibrium? Yes, we are. Right, we're below equilibrium or the mean threshold or, fair value. It's down below in a discount. We're also hitting a PD array, a discount PD array. So let's see if we can catch longs here and turn price up. All in all, you saw AU, GU, NU potentially push up and do the inverse. Let's sum it back up to USWSI daily chart. If this is going to be the next swing, 1, 2, 3, right? If this is going to be higher, 1, 2, 3. We don't want to see Thursday run out Wednesday's low. We don't want to. We want to see immediate buying here and push up. We want it to find footing for sponsorships for longs. Hopefully you found this insightful. Right, as of right now, I'm still leaning towards the bullish sentiment, so I'm a buyer for USWSI. Peace.